And here's a cool new idea, venture capital that is crowdsourced.
It's the subject of this morning's Weekend Web. Here's Charlie Wojciechowski.
Good morning. Here on the Weekend Web, we love to show you startups and how they're growing here in Chicago. Small companies that have great ideas that grow into big companies with big national followings. But how do they get big? They turn to venture capitalists like NIN.VC.
Thanks everyone for being here and your interest in our panel. We're fortunate to have some of the leading names in the space in Chicago.
Hi, I'm NIN.VC. I head a crowdfunded technology venture capital fund based here out of downtown Chicago.
We invest in Series A and Series B around disruptive technology companies and write checks anywhere from $1 to $5 million.
A disruptive technology is an innovation that changes the way an existing industry functions. So one of the deals we're currently involved in is in the 3D printing space. So if you currently go to your doctor with a damaged liver, your doctor will put you on an organ recipient list. That recipient list runs about 123,000 people, and it increases at an average of 12% annually. On the other hand, organ donor list increases at 1 to 2%. About 21 people die every day because they can't find the right organs. What if 3D printing can help some of those lives?
So you're saying actually tissue printing using 3D printing technologies?
Yes, that would be correct.
Absolutely.
And 3D printing
amazing.
is also applicable in multiple different industries, for example, manufacturing, aerospace and defense.
Yeah, of course, we've seen that in like printing, turbines for jet engines and such, but printed organs, essentially amazing. Tell me about some of the other interesting and disruptive technologies that you're involved in, things that are on the really, literally the cutting edge.
I believe at some point every industry is up for disruption. I believe your industry, the media industry, is up for disruption. I can't remember the last time I turned my television on. I'm always on my phone or my iPad or my computer. And not just me, the data supports that as well. According to Nielsen research, traditional television viewing has gone down constantly for the last 5 years. An average American spends almost 3 hours every day looking at their personal devices, which is the first time the time spent on personal screens have surpassed the time spent on television.
NIN Ventures is a crowdfunded venture capital technology firm. Tell me how you're different from other crowdfunding platforms.
2008 financial meltdown led to a liquidity crisis for entrepreneurs, companies, VCs, and LPs. Fewer IPOs means less exits for VCs, which means no returns for LPs, and as a result, venture funds are on a decline. When venture funds are on a decline, startups don't get funded, lower employment rate, and slow economic growth. So to avoid this, in 2012, the Jobs Act was introduced, which allows entrepreneurs and companies to go out and crowdfund. Crowdfunding is a practice of funding a project or venture by raising contributions from a large number of people, typically via the internet. Since 2014, the crowdfunding industry has grown from $16 billion to an estimated $34 billion in 2015 and is doubling or more every year. According to the World Bank estimates, crowdfunding will have a global market share of $96 billion by 2025, which is 1.8 times today's global venture capital industry. Crowdfunding is spread across several types of funding models, including rewards, donations, equity, debt, lending. The two most popular types of crowdfunding methods are rewards and equity. For reward-based crowdfunding, entrepreneurs pre-sell a product or service to launch a business and sometimes even in returns for gifts or thank you notes. For equity crowdfunding, the backer receives a share of a company, usually in exchange of the money pledged. For NIN Ventures or NIN.VC, it will be limited partner interest in the NIN Ventures Technology QP Fund. However, there is a major flaw with crowdfunding in general, and that is what NIN.VC is solving. I come from an entrepreneurial family, so I can speak on their behalf. Entrepreneurs are brave and courageous bunch that are determined to change the way an existing industry functions. On that journey, they need a lot more than just financing. They need guidance or domain expertise, help with PR and marketing, recruiting, viable exit strategy, and more often follow-up financing, which crowdfunding portals are not able to support. On the other hand, crowdfunding exposed investors to a whole new asset class, which the normal population never had the knowledge or expertise to invest in. About 99% of startups fail. On top of that, low minimum investments like $1,000 does not give them a say or a board seat, putting investors at a high degree of risk. At NIN.VC, we solved all those issues. We provide diversification, we take board seat on all our investment, and lend the necessary support that an entrepreneur needs to build a business like they would get at a traditional venture capital fund. And we're also in a position to gauge and be a part of the valuation process when it comes to addressing dilution and follow-up financing rounds. However, the most important part that the investors care about is the ability to direct invest and enjoy direct returns, which is not the case with the traditional venture capital fund. NIN.VC has the best of both worlds. We are a hybrid between a traditional venture capital fund and a crowdfunding portal. Another feature that is unique to NIN.VC is transparency. Investors can attend our monthly calls, check our Facebook, Twitter, LinkedIn, etc. for more recent activities at NIN.VC. NIN.VC is currently open to accredited investors who can invest in the NIN Ventures Technology QP Fund using various different investment options like 401k, defined benefit plan, digital currencies like Litecoin, Dogecoin, or Bitcoin, or just a regular checkings or savings account with a minimum investment of $100,000. Yale is currently the best performing endowment fund in the United States. Since 2008 to 2015, Yale has increased its asset allocation in private equity and venture capital from 20.2% to 33%, out of which 16.3% is venture capital compared to 13.7% in 2014 and just 10% the previous year. In general, most people have a three-dimensional portfolio, which includes stocks, bonds, and money market. But if you look at Harvard and Yale's portfolio, they take a long-term approach and invest in alternatives like venture capital. Historically, if you look at U.S. Venture Capital Index and S&P 500, U.S. Venture Capital Index tends to outperform S&P 500, and they also have an inverse relationship. This type of investment strategy allows to achieve true diversification and also helps mitigate the risk involved in having only a stock and bond portfolio. Most people are indirectly invested in venture funds via a pension fund or any other investment vehicles. Crowdfunding allows them to directly invest in a fund of their choice by eliminating the middleman, that is the pension fund and their management fee, to generate higher returns.
Or do you try to make people know what you do?
Yeah, I think part of our journey here at NIN.VC has become an educational process to educate investors, to educate entrepreneurs, because venture capital as an asset class was only available to the top 1% and the super wealthy. NIN.VC, we're the first fund that opened ourselves to accredited investors. When you expose an asset class or a financial instruments to people that have never invested in such vehicle before, it becomes an educational process. Since we're the first one, I feel like I'm educating people about what venture capital is, how the investment works, when do you see the returns coming in.
And this past year, it seems like there was a lot of noise about crowdfunding. Tell us a little bit about the overall trends that you anticipate for 2017, and seems to still need a lot of education. Tell us about that.
One of the biggest concerns that I have with the crowdfunding industry is we've made investments in companies available to everybody, but we haven't made investments in firms like ours made available to non-accredited investors. So currently, if you want to invest in NIN Ventures, you have to be an accredited investor, make more than $200,000 a year, or have a joint income of $300,000, excluding your primary residence. We expose investors to a risky asset class before we expose them to a less risk-averse asset class, which I think doesn't really make sense.
In the future, we would like to open ourselves up to everyone. I believe venture capital as an asset class has been secretly guarded and has only been available to the top 1% and the super wealthy. I believe everybody should have access to venture capital, and I hope the SEC and the government will somehow keep that in consideration and make it available to everybody and not just accredited investors. So anybody can invest in the fund with any amount.
And they're certainly lowering the bar for individual investors all the time, and the crowdfunding technology is definitely a disruptive model.
Log on to www.nin.vc and explore the world of investments with us.